Imagine two businesses. The first is a neighborhood grocery store that has just opened, and the second is a nationwide supermarket chain that has been around for decades. Now imagine a third business. It's no longer a small shop, however, it's not yet a nationwide giant either. It's expanding into new cities, opening new branches, hiring more employees, and growing rapidly. That's exactly where mid cap companies stand. Welcome to your own channel, Romance with Finance, a brand of Financial Freedom Hub. On this channel, you get the videos and information related to personal finance.
Love to read books? Go and grab this book on mutual funds. Click on the below link and grab your copy today.
In our previous video, we learned that small cap funds invest in mainly India's smaller listed companies, those ranked 251st and beyond by market capitalization. However, what about the companies that are no longer small, yet not among India's biggest giants? These funds primarily invest in the companies that are already established but still have a significant room to grow. Just like large cap and small cap companies are identified using market capitalization, mid cap companies are also classified in the same way. According to SEBI, companies ranked 101 to 250 by market capitalization are known as mid-cap companies. They are larger than small companies but smaller than the country's biggest corporate giants. Because mid-cap funds offer a balance. Many of these businesses have already proven that their business model works. At the same time, they are still in their growth phase. As they expand into new markets, launch new products, or increase profits, their share price may grow. That's why mid-cap funds are also often associated with higher growth potential than large cap funds. Higher growth potential usually comes with higher volatility. Mid-cap companies are more sensitive to economic conditions than large companies. During good market phase, they may rise faster. However, during market corrections, they may also fall more sharply. So investors need patience and a long-term perspective. Think of a person's career. A small cap company is like a fresh graduate starting their first job. A large cap company is like a CEO of a multinational company who has already achieved tremendous success. Mid cap companies are somewhere in between. They are like experienced professionals who have already proved their abilities, who are getting promotions, who are taking on bigger opportunities, and climbing the corporate ladder. They are not at the top yet, however, they are steadily moving towards it. Generally, investors who are investing for the long term. Investors who can tolerate more ups and downs than large cap funds, and investors who want higher growth potential while accepting higher risk. Keep this in mind that higher return potential doesn't guarantee higher returns. It simply means the opportunity and the risk both are greater. Let's summarize. Mid-cap funds invest mainly in companies ranked 101 to 250 by market capitalization. These companies are in the growth phase of their business journey. Historically, mid-cap funds have offered higher growth potential than large-cap funds, however, with higher volatility. They are generally suitable for investors with a longer investment horizon and a higher risk tolerance. We have now covered large cap funds, small cap funds, and mid cap funds. However, one important question still remains. If each of these has its own advantages, why choose only one? Every investment has its own personality. Large cap offers stability, mid cap brings growth, small cap carry ambition. The secret isn't finding the best one, it's finding the one that's right for you. In our next video, we'll explore multi-cap and flexi-cap mutual funds and understand how they combine different market capitalization into a single portfolio. Hope this video was useful to you and you have learned something today. If yes, then